Good evening. Ira Epstein with your financial market wrap-up. And this wrap-up is for a pretty active Thursday, and it is December 12th, 2024, 6:20 p.m. Central Time. So today we had the CPI number, and it came in hotter than the market thought. Could I use the word red hot? No, but it was certainly on the stronger side. And that means that we saw inflation again climbing. That'll fit into the PCE number because now the calculations are there, and you'll be able to extrapolate what that is. It'll be slightly higher is what the trade thinks. And it weighed on the stock market as you had a break that kicked in late afternoon. It wasn't real late. It was probably after 12 o'clock, and the market started rolling down. And in fact, in some, you lost what we call the bullish embedded reading. Others are still doing good. Example, NASDAQ got hit, it's right back up 100 points tonight. S&P got hit, it's up 8. But on the S&P is the one that I saw problems. And I explained everything in my morning videos. In the energy markets, I pointed out a lot today as I was talking to the traders. I said, number one, this is, to me, all about China in the metal markets, right here. Pointing to the wrong ones, right through here. And the impact it's going to have right through here. I said, it's not about tariffs. China and the U.S. aren't doing anything together nice. It was real nice of President-elect Trump to invite President Xi to the inauguration. I thought that was gutsy and a smart move. And, you know, he's holding his hand out. I don't think that that'll happen. But more important, by the way, I'd like to see that happen. Open the door up. We don't need to be at each other's throats. That would be great. And everybody modify positions. Did you hear the word everybody? That would be Trump, too. When I looked at today, the work conference end in China, I was pins and needles. I got up very early. Watching the news. There's many outlets you can go on the internet for Chinese news, economic news, and I'm there, and I didn't like what I saw. Again, they walk out, and I don't understand people. They walk out, and you know you got a property market falling apart. Have fallen, and it's not getting a rebound in many of the areas. Number two, you have a stock market that, at best, it's hanging on every word that you're doing. You have interest rates that keep crashing on you, going down. What are you trying to accomplish here? I think what you're trying to do is give the economy something to go. And instead, they walk out with their generalities. Well, we're going to offer the stimulus. Well, we're going to do this. Well, what are the particulars? Oh, the committee's not ready to discuss that. We normally release all that information in March. So 90 days from now, you have to wait. So what did gold, silver, and copper do? Shaboom. Early on, you had the highs made in the crude. You fell from those highs most of the rest of the day. When we looked at the U.S. CPI numbers, well, what happened is, while the two-year note is doing a relatively decent job of just hanging in there in the 6-month, the other markets are adding yield because the market's coming to the realization that U.S. inflation is very sticky. Shelter inflation is still there. The good news is these were the lowest shelter inflation increases that we have seen in a very long time. I don't mean a couple of months. I mean a very long time, going back real long. You're only up 0.23%. That's minor. I'm doing this all from memory. And when you look at how that all works, none of this to me stops the Fed from saying we're going ahead of the curve. We're going to go 25 basis points December, and then we'll see what we've got. Forget January. It'll most likely be the March meeting that will be a live meeting again. That's what I think is going to happen. So the stock market had to deal with that today, and now it's got the CPI out of the way, the PPI out of the way. All right. When you take a look at the mini weekly S&P index, if we were to close right here with all the craziness, you're down not even 1% for the week. You're in the quiet zone, that's what I call it, and still have the pattern. You could see it right here, higher lows, higher highs. In the momentum here, I started pointing out to you the loss of momentum right through here, and you have been stuck. You came up, and you don't have to agree with my charting technique, but you can't argue that you're just going sideways temporarily. Even today's break fits in that. You still have the higher lows. Got that? So that is the part there. Could the market drop down to the 60.38 level for support? It could, but that's 30 points from here. What's going to make it do that? I don't see it. That doesn't mean it has to go up. I'm just not seeing it falling apart right here. I think the market's just going to take volatility out of the market for a little bit and get itself ready for whatever the Fed does on Wednesday of next week and says in the news conference. And after that, I think Santa comes to town. That's just my guess. Momentum-wise, I believe momentum leads price, not price leads momentum. Does it always work that way? Of course not. Does it most of the time? Absolutely, in my opinion. And I want to use the word capitalized quotes, my opinion. As you can see, the market lost its momentum. When did it lose it? Yesterday. I know you don't believe me. Well, it's Thursday. Why do I say yesterday? Follow me and I'll show you. Because if you go to Wednesday, you were an 85 reading. You need the number, if you get under 79, we're already in Friday trade tonight. So yesterday, in terms of market parlance, you lost the reading, and tonight, which is Friday trade, it sounds confusing, but it isn't, you're down even further. So can the market come down to the 18-day average? Absolutely. Is it a target? Absolutely. What would stop it? Re-embedding the reading or making a new high on the move? One of the two have to occur in order for it to not get where price and that work towards each other. And if you think about it, you got then Friday, Monday, Tuesday, you go into Wednesday at the afternoon, it could all happen. The NASDAQ is nowhere near as weak as that. This is still where the power is. Higher lows, higher highs. Okay, you're trying to work that part out. Actually, this is a lower low and a higher high. Take that back. I'm already into the chart. If you were to close like this, you'd have the higher highs. But this is what I think is driving the market, the embedded reading there. The Dow has been one of the losers. Look at how it's been in a vertical price correction. It doesn't have to go much further. I was hoping it would find support closer to the 18-day average. It didn't. So now it's a vertical move. It's like a rubber band. You pull it eventually, you get a move out of it. So we will see what's going to happen there. And when we come over to the Russell, you have lower highs, lower lows. Now I should say the NASDAQ 100 is now looking to readjust. So there's going to be very possibly tomorrow some new stocks put in, others taken out, including Moderna. So you want to be on the lookout to see, is the market anticipating in the NASDAQ that, and that's why it's that strong. When you come to the Russell, this has been the dog. Now the Dow joined it, so it wanted a brethren to it, and it's got it. Could it fall down to the 2332 area? Yeah. It's already oversold. Do I think traders are deploying new money on the short side? No. Do I think that probably open interest is falling, meaning traders are disgusted, they're probably getting out? Yes. And I don't see the bottom pickers for a reason coming in yet. When we take a look at the 10-year note, well, you've added yield. Remember, inversion market. As it comes down, that's it. You do remember, we lost the bullish embedded reading, and the goal was to get there. And I've been keeping those up in my subscriber videos. And I'm showing each time we're losing embedded readings as to how they're doing. And interesting what happened there. Same identical thing, finally hit it here because you lost the embedded reading all the way back over here. And now the market has gotten down to what it should. Are we trending? No. We're correcting. Big difference. In the dollar index, do you see a trend here? I don't. I see a market that's got a high, had a correction low, and is doing this. Zing. I made a comment when I was doing the metal video, and I said, if you think about F1 racing, I'm a car freak. I love watching car races and all that. F1's my favorite. But when I watch it, you understand that the cars are partially built with hybrid engines, which are battery. And they have to recharge the batteries, and you watch what they're doing. Well, this is like a recharge zone. The market's trying to figure out, what does it do next? Obviously, there's a lot to digest, but you saw today that the Swiss National Bank got aggressive. They went 50 basis point cut. The European Bank, I think, made a mistake. I think they should have gone 50 basis points. I think they're doing what they typically do. They stay too cautious and they hurt themselves instead of being bolder with what they need. I don't think there have been very many negatives from them going 50 basis points and do a look-see come the first quarter of the year. Now they're almost, with their economies, which aren't as strong as the U.S., almost forced to go another 25. Why not take the medicine and get better? I don't get that. In the euro, you could see how the market, it was disappointed, by the way, in all this today. So as it's down, you know what you're looking for, the dollar up, and even the British pound got hit. So we didn't get back to the 200-day average and up here. We've lost the bullishness. You're in a correction on the market now. So you have the trend down, the bias up since you're over the 18-day average, close under 126.72, and you start getting even more bearish. And guess who's waiting in the corner to tell us something? Oh, they're not here in the studio, but Mr. Bailey. And we'll find out what he wants to do. Oh, I forgot. Then he's got a friend coming to the party, the Japanese bank governor. Oh, Ueda's coming. Yes, he's coming to dinner too. And then who else is coming? Oh my God, we have next week Powell. So we have a lot more data coming. Creates uncertainty. What's not uncertain right now is the market keeps getting well bid in Bitcoin, but like the dollar, this has been its charging cycle, going sideways. So it's like almost a spring in a pipe. You wind it until it bursts out. This market, I'm already hearing the talk of $150 in mid 2025, 150,000. I just said 150,000 a coin. Then we come to the energies, which are doing this. They're waffling. And today, to me, was a disappointment day. I mean, the market really wants to see China able to pick up more oil, so their economy's got to get better. This chart is neither bullish nor bearish. It is just going up and down and wandering. You're walking in now to the 100-day average in the upper Bollinger Band for resistance. I see the same thing in WTI. You're at the resistance of the 100-day average in the Bollinger Band, void of a trend. You have a lower low, higher high. The cold weather is bringing in some demand for heating oil. I woke up in Chicago. Forget wind chill. We're 3 degrees this morning. I don't think we're hitting 15 today. Now we're going to warm up into the weekend and probably get near 40s, maybe even they said could be 50. But this cold spell is going to go through the country, and you get a lot of demand for natural gas and heating oil. I know I'm cold in my house. I mean, you know, outside when it's 3-4 degrees, I don't care how well insulated, you feel it. Higher lows, higher highs, natural gas, right into and magically stopped again at the Bollinger Band and the 200-day average. What did I say yesterday if the market was going to give you that bounce? Said target that area. I know it. And if it goes there, that's where the pros probably come out. I haven't changed my opinion in any way. So this was just more or less a day today of, I think, a lot of disappointment. And now the question is, can the market come alive? It probably wants to wait and see what, as we get to the Fed, and then the market gets ready for that Christmas wrap up and whatever it's going to do. And I know you'll say, oh, well, traders are going to leave for the holiday, and they are. That doesn't mean the market leaves, okay? Will volume thin out? You know it will. But there's ways to take, ideally, advantage. And one of them, if you join me here, is joining me first thing in the morning. Because at 6 in the morning, I'm typically talking to you the futures market. In my video, I start recording at 6, go through what's going on in Europe, Asia, how it's coming back here. I talk fundamentals along with the daily. On our website, the charts are going to look this way. They jump off the page. I teach you every day what I'm seeing there, why I'm seeing it. I stick my neck out, buy here, sell there, use a stop here, do that. If you're looking for me to be wrong, you're going to be right. If you're looking for me to be right, you're going to be right, because like everybody, I get both. Who doesn't? Name of the game is experience, ideally money management, ideally knowing how to hold on to trades if you can. So, IraEpstein.com research. It's that simple. You can move your cursor at any point up on the top of these screens, by the way. There'll be an icon there and it'll take you there. But the easiest way is just type that in and away you go. I'm Ira. I'll catch up with you in the morning.